Good morning and welcome to VSA Capital 5-Minute Morning Miner. It's Friday, the 10th of December. We really are cracking on with December and into the Christmas season. I'm sure people are starting to go to Christmas parties now. Paul, how about you? Any Christmas parties yet?
I have been to one Christmas party, yeah, but not too many scheduled going forward here at this point.
Well, it's this coronavirus. A lot of them are being cancelled, aren't they? And not everybody wants to go to them.
Yeah, I know. I do too.
Yeah. Anyway, let's crack on with a bit of news today. Let's start with my favorite, tectonic gold, Paul. I mean, I'll let you comment on the RNS this morning first.
Yep. Pretty simple situation there, that because of delays with assays and that sort of thing, logistical issues around professionals being able to work around COVID curtailments and so forth. The Tectonic has decided to push back the eligibility for exercise of the February 2022 warrants to July. It allows them enough time to get all the assays back and essentially plan the 2022 drilling program to be able to present to investors before those are expire. It also they also made a point to say that they do have enough money to complete the 2021 program, which they had to curtail early due to weather. So the warrant exercise itself doesn't put them in any financial difficulty.
But it isn't the other key part, actually, in the first sentence, Paul, where it says it is pleased to announce that the discussions with potential development partners in respect of the company's licenses are progressing.
Well, I would say that that's been in the news things for the last 6 or 9 months or so, but it doesn't actually add anything new to the story. So it's still a really good project that the majors are equally interested to see what these assays are.
Yeah. Which majors do you think that would be looking?
Well, they've been surrounded by Rio Tinto already here on 3 sides with acreage, so that's the first likely one to have interest to have a look. But anybody like the other Australian players out there, like Newcrest and so forth, would also be looking closely at it.
It would be nice, wouldn't it, if we had a nice, well, either obviously a farm in, a bit like Greatland Gold did, or a nice takeout. I think shareholders would be delighted.
I think shareholders would be delighted, yes.
We've all got about 5p in our minds. I know that. That's what. Anyway, there we go. Enough of that. Let's move on. What else you got, Paul?
Record Gemfields, the Ruby auction results released out today. Gemfields being the colored gemstone, emeralds, and ruby producer in Africa as well as Latin America. Rubies from the Monte Puez mine in Mozambique here. And it came out with revenues on this particular auction of 88 million at an average price of $132 a carat. And of 107 lots offered, 104 were sold, so only 3 lots or less, only 3% of the lots didn't carry through, which means they have all-time revenue in the annual period here of 239 million across emeralds and ruby auctions at this point. So definitely a nice recovery going to come out in financial statements for Gemfields, I think.
You've liked that one for a little while, actually, haven't you? So
yeah.
Do they still own Fabergé?
That I can't. I'd have to go look it up, actually.
That caught you on the spot. Sure. All right, let's move quickly on. What else?
We have Anglo American actually put out a forecast here on what they expected their full year 2021 results to come out to, and that was for production to be up by about 7% overall, backed by the PGM and rough diamond activity. Unit costs they also thought would be up by 10% as well, given to some inflationary pressures in underlying operations. But their capex commitment would be down because of delayed delivery into construction of various projects. So that would only be at 5.2 billion versus a bit more they were expecting for the year. 2022 unit costs they expect to go up by 4%. And they expect their capex in 2022 to be a little bit higher, up in the 6.5 billion range because of some of this deferred 2021 expenditure. They also announced today in a separate announcement they're making some safety design changes for the Woodsmith, the polyhalite mine up there in the UK. And that just as they get through the development and construction program here, they're given the length of time between the original designing and the actual delivery here, they feel they can make or would like to make some changes in that regard. Also, that Tom McCulley, who had led the Quellaveco copper project in Peru, would take over as new CEO of crop nutrients, where Chris Fraser, who had come from Serious Minerals about 12 years ago and been leading the Woodsmith program for quite a long time, will step down.
Okay, and do I see Kenmare is doing a share buyback, quite a big one actually?
Yes, they had announced a share buyback some weeks ago, and they announced the tender results here today that 13.5% of shares in issue of Kenmare had been tendered into the offer of £4.17 per share to buy back, which means it will be a cost of 62 million sterling to Kenmare. And essentially, they will be able to cover pretty much all of what had been offered up to them. It wasn't overly subscribed to, where they had to roll people back by quite a lot. So it looks pretty successful here.
Yeah, I mean it's a slightly complicated story, isn't it, Kenmare? I mean they've done various share consolidations and things. I mean the price at one stage was I mean if you go back to sort of 2012, 13, it was significantly higher than it is today. It's been a very tough story, isn't it, Kenmare?
Yes, but the perseverance has been rewarding enough for management as well as the shareholders, I would say. It's just the difficulty that is represented in bringing a big mine into production by a company that hasn't done it before. So.
Okay, anything else, Paul, or should we call it a day?
Just a quick mention of that news big news in M&A activity that came out late Wednesday, and that's Kinross Gold to take over Great Bear Resources at upfront payment of $1.4 billion US plus contingent payments to follow once the Great Bear's Dixie project is brought into production, given on the expected size. It's important to note here for investors that Great Bear has not yet declared a maiden resource at all for the Dixie project. It's all based on drilling results into the public space, plus the internal due diligence that Kinross has done to offer such a big amount of money for Great Bear.
The number of times we said, watch out for more M&A activity on this podcast, Paul, I'm losing count, but there will be more and there'll be more. All right, have a great weekend, and we'll be back again next week.
Very good. Thank you.